glory of God, by 2011, I finished everything. 2011, November, I got my certification. Then I applied to have my accounting firm the same year, 2011. By December, within 1 month, I got my approval to have my accounting firm. And since then, I've been doing all these practices. I've worked in various places too. Municipal government. I was director of finance for Fort McMurray, city of Fort McMurray, the largest municipal in Canada. In terms of dollar values, their annual operating budget is over $1 billion. Their capital asset is over $2 billion. I was director of finance for 4 years, to the glory of God. Then I moved to town of High River. In Fort Mac, I had about over 75 staff working in my finance department, and about 50 of them are designated accountants all over the places. So, to the glory of God, the moment I finished all the exams, the door opened. So please, if you are here new, just be focused. You need to determine what you want to do. You cannot be moving. Yeah, a lot of advices will come. Oh, you have to start from where I started. Oh, you have to do this. It is not true. You don't need to know anybody. I did not know anybody before I got all these jobs. The good thing I had was, that CPA was part of my designation. And anybody that sees that, they know, this person's integrity is not in question. Oh, this person, if there's any issue, it has rope on his back. We can go to CPA. So those are the advantages of professional bodies. It's not that they are better than our institute, but they don't know you. Most people, what they know. In fact, my first interview with some of them, they said, you say you are new in Canada and you speak English like this. Oh my God. Yeah. Oh, they always think everything is Canada. I had to tell them, it's because you people don't read. We got independence the same way you got from British people and all that. Today, to the glory of God, immediately I finished all the exam, I said, okay, people that are coming should not be facing this ridiculous thing. So about 4 of us, we had to face CPA. As at that time, 3 of us, we already had CPA. We said, these ICANN people, they are professional people. You cannot ask them to start preliminary stage. They need reciprocity. And good a thing, I have my CPA. Other people, we have our CPA. It's not useful for us, but people that are coming, we started fighting the battle. Oh, you can't do that. Why can't we do it? Oh, you want to take our profession from us. We are not taking away your profession. We want to be at a certain level. We still want to do some of the exams, but not to start from scratch, business English or something, or communication. But to the glory of God, we fought it. This year, we got that reciprocity with CPA. So anybody coming with ICANN, you just do final papers and you are a CPA. So thank God, and sorry for the digression. I'm sure it will be useful for some people. So this morning we are here for, do I need to face somewhere? Oh, maybe it's not on. Oh, okay, thank you. Okay, so this morning I will try to go over this as quick as I can, because the myth of the presentation is on the question and answer sessions. So briefly, I will talk about, today is about overview of Canadian taxes. My aim is not to make you a chartered accountant or a tax expert in 30 minutes. It's not possible. And 30 minutes is not even enough to go over Canadian taxes. But you will be able to understand all the basic principles. And if I show some calculations, don't worry yourself how to learn it, how to cram it. It's not useful for you. It's the information that you need, and how do you go about it. Because in Canada, unfortunately, it's one of the countries. In Nigeria, once you die, that's the end of the person. But in Canada, there's what we call final tax liability. Even as a deceased person, that deceased person must still pay final tax before the body can go anywhere. It is a law. So whether you hold them alive or, if you like, be hiding, when you die, they will still open all the records and they say, oh, sorry, this dead person has not paid taxes in the last 10 years. So then they will give calculations. This is how much it's supposed to. It's not alive to defend it. So it's at the mercy of CRA. Whatever they give, that's what the family has to look for. So that's why we need to do everything, work within the ambit of law. Don't be caught. There's no shortcut. There's no free money in Canada. A lot of people think, white, oh, I'm here, yeah, free money. There's nothing like that. So who is liable to Canadian income taxes? We'll talk about the benefit of tax filing. Why do I need to file tax? Canadian income tax principle, composition of income for Canadian personal income tax. Everything I will be talking about is personal income tax. If you have your businesses and you want to talk about it, you can reach me after. We can have a discussion on corporation tax, but I do both personal and corporation. Types of income, liable deductions, what are liable deductions you can make, what is double taxation treaty. I know most of us will still shuttle between Nigeria and Canada. What is the implication? How can I not run against the Canadian law? So we talk about the treaty that protected you. What is tax evasion and tax avoidance? And well, maybe we talk about RRSP briefly. RESP, TFSA. Luckily, you have Brother Wale here. He's an expert when it comes to your investment, RRSP, RESP, TFSA. Pastor, are you sure I don't need prayer? It's only you that can operate this thing.
It's working.
Oh, it's working. Thank you. Oh, okay. So who is liable to Canadian personal income tax? All Canadian residents. Canadian residents. You will notice I did not say citizen. All Canadian residents. It is mandatory for you to file your federal income tax and provincial income tax. As long as you have your PR or your citizenship. Once you have that, your PR, as far as Canadian law, you are a resident. Whether you live here, you don't live here is irrelevant. You have what we call deemed resident. Even if you don't have PR, even if you are not a citizen, but your children are here, you always come here to spend your vacation. If you stay in Canada for more than 180 days, for their law, you are deemed to be a Canadian resident. By the time you are 6 months plus 1 day, you are deemed to be a Canadian resident, and they expect you to file your tax in Canada. Or if you have ties with Canada, you have bank accounts. Even if you don't stay for 180 days, maybe you came for vacation, 3 months, one month, but you went to Scotia because you know where Brother Wale works, or you went to TD, you open an account. Or maybe you have enough money, you bought some properties for rent. Then you flew back, your tenant sent you money, e-transfer and all that. At that stage, you are a deemed resident. And Canadian government will expect you to file your taxes to Canada. Like I said, deceased, as a deceased person too, is supposed to pay the final tax as well. What are the benefits of tax filing? Of course, to create your records with CRA, if you are new, you know we have so many names, first name, middle name, last name. Sometimes when you come, there may be mixed up. Your middle name becomes first name. Back home, we did not know too much about first, second. Just go by this, that, but that is not the way here. So sometimes on your immigration paper, you may have issues. But the moment you file your tax, the first one, if your record does not agree with the immigration, the system will tell us, sorry, this information is not the same. then we'll be able to fix it and correct it. So it's very important to create record with CRA, and of course to collect any refunds or claims. For instance, GST refunds. If you file your tax, that's when, depending on your income, that's when you'll be able to claim that. And or if there's any benefits, the CRA is the only record where people can claim their benefits. So for a lot of reasons, it's always better to file your taxes. And also for the people that came within the year, there's a rule that CRA always follow. And we always work on a year preceding basis. In 2025, we'll be talking of 2024 tax year. So everything we are doing in 2025 is for 2024 tax year. So assuming in 2024, somebody came in February or March, early of the year, CRA expect that person to file the tax for that 2024. But assuming you came in towards the end of 2024, let's say September, October, November, or some people came in December. So those people that are part year, they are not mandated, it's not compulsory. They should start filing their taxes from 2025 tax year, which will be done in 2026. So they have leeway not to file. But I always tell my client as well, if you file, you are not losing anything, because what you are paying taxes on is your income. You are allowed to file zero income, because just like what Brother Wale said, assessment is a self-assessment process. Tell us how much you earn. If you did not earn anything, you put zero. That does not mean you should not file taxes. I've seen some people, I've been in Canada for 2 years. I've been looking for a job. That's why I've not filed my taxes. No, filing taxes is not about job. Tell me how much you made. I did not make anything, zero. Yeah, that does not still preclude you to file taxes. Some people think until when they start making money, no. So Canadian income tax principle is just like Nigeria too. It's pay as you earn. The more you earn, the more you pay. We have federal personal income tax, we have provincial personal income. Do I need to file both? No, it's only one. You won't even know, because once you file your taxes, every calculation is done for federal, is done for province, and all the payment goes to CRA. CRA works with all the provinces, they settle themselves. Based on the calculation, they know how much belongs to which province, because as part of the regulations, you need to indicate where you live as at December 31st of that year, and that determines where your taxes will go. So you don't need to bother just for you to know that when you file your taxes for both federal and the Alberta province. Composition of income for Canadian personal income tax. The Canadian income tax is based on worldwide income approach. Worldwide income. Any income you make while you are here, whether you are here or not, like I said, whether from Canada or UK or US or Nigeria, is irrelevant. Worldwide income, you're expected to declare it. But the question is, if I declare my worldwide income, I've paid taxes in Nigeria, I will still pay tax again. That is why we have the treaty, that treaty that I mentioned. Luckily, Nigeria is on a treaty with Canada. Nigeria, US, and UK, they have treaty with Canada. And how treaty works is that any taxes you paid on your, let's assume you work in UK, or you worked in US, or Nigeria, where there is treaty. So whatever tax you've paid there, we will consider it. When you declare all your income worldwide, we now say, okay, this is how much you're supposed to pay. Then how much have you paid in Nigeria? When we convert it back to Canadian currency, we now reduce it. You paid 5,000 or 10,000 to Nigeria out of this 12,000. Then we reduce it. You then pay the balance to Canadian government. So that's how that works, so that you are not penalized for two things. And some of my clients, big people in Shell, big people making good money, but their family live here. I have a client in the last 12 years, I've been filing taxes for him. And he has never lived there, although he has a house here, the family are here, but he shuttles. And he has never paid taxes, $1, in that last 12 years. Because everything he pays to share, they take money and we produce the evidence. So a lot of Nigeria think, oh, if I declare my income, no, it's perfectly okay. There's never been any query. Of course, they will ask for documents, show us your tax clearance, show us this, show us that. Once we provide that, it's free. So there's no issue about worldwide income. So your income includes your rental, your dividend, your pension, anything, gifts, tips, all those, they're all income as far as they are concerned. And of course, the income that we are talking about is cash basis, not promissory notes or something. If you did not receive that money in 2024, let's assume you work the last week or the last 2 weeks in December, but you were paid in January. That tax is for January, not for when you worked. When you collect the money, it's cash basis. So that's when, not accrual basis, yes. Casino and lottery winnings are tax-free. I know this is house of God. I'm not asking us to be doing that, but I always mention it. This is their law. If you play casino and you win 200 million, it's zero tax. But if you work and you earn 50,000, you will pay taxes according to the tax brackets. So that's their law. There's nothing we can do. But please, casino and lottery is not a shortcut for you. I won't advise you go in there. Some people are lucky, but what usually surprises me is a lot of people that win casinos and lottery, some of them still commit suicide. I can't understand it. 100 million free money, but they won't still know how to use it. They will run mad and all that stuff. Yeah. So it's not the best way. And of course, income is transparent in Canada. Every information is available, unlike back home. You can hide. Here, you can hide just for a little time. You cannot hide forever because everything is transparent. And even though they call it self-assessment, they tell me what you made. Don't think they don't know. They do, because it's a law. Every company you have worked for, even if it's one day, by February 28th, latest, all companies in Canada must send the returns to CRA. All banks in Canada must send their annual returns. And they know, they are just waiting for you. Some people, they will do several jobs, several T4s. I don't want to declare that one. That one's just for 2-3 days or 2 weeks. Let me just declare the big one. You are just deceiving yourself. Declare the big one. They have 4 T4s for you. You are saying you have 1. No problem. Declare your 1. Then, by the time they review, they will come back to you and tell, sorry, you have T4s. You only told us 1. And they will do the calculation themselves. And the good thing is that if you told them only 1, if you due for refunds, they will give you refund before the review. They will give you the refund. Okay, based on what you told us, take the money. But by the time they do the review, you are owing. They will come after you. And that's when they are coming back. They will not charge you penalty. They will not charge you daily interest every day, compounded, until you pay it. And because of their law, like I said, even at death, they are very sure they will collect their money. So they don't run after anybody. They will write you. They continue to charge the interest. They don't have mercy. You may owe 1,000, leave it for 10 years, it becomes 50,000. They know you have to pay that 50,000. If you don't pay it, your estate will pay it. Otherwise, they won't be able to do anything to your body. So, and it is very dangerous to have issues with CRA. I have a lot of people, some, not a lot, few people that run into CRA problem. CRA, they have every power to go after their money. They have every power. They can take the money from your salary. They can take the money as part of your mortgage. They can do anything to frustrate you to get the money. They just need to write your bank. Because they have all record. They know you have a house, you pay mortgage of 1,000. They just write the bank. Add 500 to this 1,000. And the bank, there's no bank in Canada that will not, it's automatic. They won't ask them any question. It's auto. They'll be deducting it along with your mortgage. And even if you don't, yes. Mm-hmm.
Block the account and
Yes.
the money is paid.
Yes. They can block your account, they can do anything. They can write to your employer that you are owing so much. So it's always better not to go into their net. If you want to look at it as Christians as well, what did Jesus tell us when they were running after him? If Jesus can pay tax, he's supposed to have argued, don't you know who I am? I'm a son of God. I'm God myself. Is it because I just decided to come and save you people? Now you're asking me for tax. But he did not even argue with them. Give what belongs to Caesar, give it to him. And what of your own tax? Okay, you go to the fish mouth, bring the coin, give them. So if Jesus can do that, so we don't have any excuse. And the greatest thing is that those taxes that you pay, is the most important thing is God to bless the remaining. It's not only the tax, it's the blessing of God that comes into it. Even when we look at 10% that we pay, God deserves more than 10%, right? Because if you look at the remaining 90, God forbid bad thing. One issue of health can clear the whole of 90 that we think we are just keeping, we are just guiding. A lot of people, they pay through their nose and mouth to get oxygen. Oxygen that we all get free of charge. For 60 years, for 50 years, for 30 years, zero. Let them give a bill for 1 week oxygen. An uncle came to attend my daughter's wedding in July. From Nigeria to US, from US they came here. And they were in our house for about 4 or 5 weeks. They were the first set of people to come. An elderly senior brother. He should be about 70-something. Few weeks, a day after the wedding, nothing happened to this old man. He came with the wife. And we just went, after the wedding, the next Sunday, we went to church for Thanksgiving. You can't believe it, the daddy collapsed in the church during the Thanksgiving. We had to call 911 before they came. They did what they could to revive him. Then he said he was fine. Everything, they examined, they went. We went back to service. After a few hours, the man collapsed again. We had to call them back. Something is still wrong. It was after that they now took him to one of the hospitals in Calgary here. Thank you, sir. No, omitted work. So just to buttress the point that what God is doing for us that we don't appreciate. Believe you me, the dad went to Foothills. Thank you, sir. And they kept him there for about 4 or 5 days. Nothing serious. They did not discover anything. Okay, they said he had some internal blood or whatever. Not something major, no surgery, nothing. So after they discharged him, after 5 days, then they now sent the bill. The good thing is that we asked for the bill because I was thinking of about nothing less than 5,000. So they said, no, health first. They treated him, they released him. So after 2 weeks, they sent us the bill. Can you guess how much for 1 week or less than 1 week? 50 is correct. 50,000. No, ambulance is $600. $600. But the moment you leave there, they serve you food, they do this, they examine you, that's you are. So, and good thing they send the bill to the man, and I said, why don't you send to the man has children in US. Some of them are doctors too. So, oh, thank you. So they said that they should supposed to send the bill to the patient, not to anybody. Then the daddy had to write them. I'm a retiree. I just came to Canada. I'm going back next week. My monthly something. I cannot get this money. They said, okay, the best they can do for him is he will pay in 7 years.
Not that he will forgive.
No. Meanwhile, the old man was asking for forgiveness. I don't have money. I don't have any. They said the best they can do is to, for 7 years, be paying, is it 500 or 600 every month? They said his own pension is not $600 in a month. So just to let us know that God has been so wonderful for the good earth that we don't know. Yes. So please, if you are bringing anybody to Canada, I know this is not part of it. Insurance is very, very important. Don't negotiate it. Don't negotiate it. Yes. It was when we had that issue, I called the daughter in US, who is also a medical doctor. Did you do insurance for daddy? No. I don't even think we're supposed to do it. Oh my God. No insurance, nothing. So if they had had insurance, that would have covered them. So please, if you are bringing your aged parent, as long as they are coming, even if it's for a week or 2 weeks, of course you will pay premium, maybe 200 every month or 100 every month or something like that. That will cover you. A lot of Nigerians will say it's waste of money. It's after they have left, they now start calculating. You see how much we have wasted now. And the old man did not seek. I told you the man is very strong. Don't risk it. Do the insurance. If you need to use it, you use it. If not, leave it. So types of income, like I said, employment income is usually on your T4s or your T4A. Your pensions, your investment income, which is usually on T5. Taxable capital gains, when you sell capital assets, we always calculate the capital gains. And self-employment income, if you have your business that is not incorporated, you will file it along with your personal income. But if you have incorporated company, they are two separate legal entities, you file them separately. Other income, tips, and all those. RRSP withdraw, if you withdraw from your RRSP, even though it's your money, but because it's designated for RRSP, there are rules that you can use to get that money, even though it's your own. A lot of people are still also getting confused. But it's my money. Why is Brother Wale telling me I cannot use my money? No, it's your money, but don't forget it's RRSP designated. When you got the money, you did not pay tax. And that's why the government is interested on it. If you have paid tax, it's your money. Use it any way you like. But RRSP is meant to be there until retirement. It's not something you contribute and say, oh, next week, or oh, I want to do something. Let me go and take from there are rules. And we need to follow those rules. Your WCB and social income. Some of them are not taxable, but you still need to report as income. So those are the examples of incomes. Liable deductions. Usually I always mention about tips. How will they know tips? Like I said, everything in this country is transparent. If you work in Mr. Biggs, apologies, I've been in Canada for 15 years, but every day I don't know the name of that. I always call them Mr. Biggs. McDonald's, thank you. They look like Mr. Biggs, and every time on my head, Mr. Biggs. So if you work in McDonald's, and every other people, they declare tips. So it's only you that you did not declare, they will know. And at that stage, they will just give you any assumption. But if you have declared something nominal, yeah, perhaps they won't flag it. So that's the way they also capture every other income too. So allowable deductions are what brings down your income so that your tax will not be that high. If you contribute to RRSP, your union or professional dues, or your moving expenses, there are rules for moving expenses. If you move from one province to another, not moving from Shaganapi to, no. If you move from one province, Alberta, even if it's outside town, if you move from Calgary to Edmonton, or you move from Calgary to Fort Mac, or to another province completely, there are entitlement for you on moving expenses, but that moving must be job related. If you move because you want to resume work, not you move to start searching for job. So if you move to go and resume work, there are some expenses, all your moving expenses, you are allowed some part of it to bring down your tax liability for that year. Employment expenses, very limited for personal income. But if you run your business, your self-business, yeah, all your expenses to run your business is part of your expenses. And you only declare the net income that you make. And personal income tax credits, there's what we call basic personal amount. There's spouse dependent, there's disability, there's employment amount, eligible tuition is there, medical expenses is there, donations, tax receipts. These are all allowable personal tax credits. And just to declare, a lot of people, when I make presentation, they will start adding 15 plus 15 plus this, so government will give me this 50,000. No. That is why they call it non-refundable. So all these calculations will be useful if you have worked and you have paid taxes. To bring down your taxes, that is when this will work. If your income is zero, just forget all this. It's not useful to you because they won't give you that money. They can calculate it, they will sum everything up, 15% of it, how much does it come to? Then just to reduce your tax liability. But if you have not worked, there's no way you can get it. Medical expenses has its own rules. It's not everything that is refundable. They expect you to pay your 3% of your net income first. If you hand 10,000, 3% of that, you should use it for your medical. If you now use more than that, then after that, the remaining, there are rules that will guide your non-refundable credits from medical expenses. Donations as well, donations from churches, yes, there's also a rule for it, but you will get your non-refundable credits as long as it's a charitable donations that you give, and it should be within Canada. Not all donations qualify for it. That's why I mentioned charitable donations. Any organization that does not have charity or charitable license, they cannot give tax receipt. And when you don't have tax receipt, you cannot claim it. Oh, I donated 2,000 to my church in Nigeria. Yeah, that one is between you and God, not Canadian government. So, and some of our people, they are so religious too, especially those who are new. They'll be, when church give us envelope every Sunday, write your name, your address, your this. It's not for church. It's for CRA, for audit purpose, for everything. And some people will be saying, oh, it's between me and God. I've given something to God. Why? I don't want to write my name. No. You are shortchanging yourself. You are shortchanging the church. You are shortchanging everybody. If government says, out of your donation of 2,000, we will give you 500 back or 700 back. So what is your problem? The 1,000 you have given to Brother Wale, that one has gone to God. God has received the 1,000. He has given you the blessing. But government is saying, okay, because you are not supposed to pay too much tax, take this back. And you are saying no. Because if you donate and you don't put your name, there is no way you can get receipts. And once you don't have receipts, you won't take the tax benefit. But what I always tell people is if you are so religious, which is good, collect that your 600, donate it back to church. They will still give you something on top. Yeah, be doing that. You are multiplying the income to church, which is good, rather than just forfeiting everything. So, and also we have what we call family returns, Mr. and Mrs. A lot of people are also confused. Do I need to file separately from my wife? What God has joined together. Yes, what God has joined together. Unfortunately, CRA tax will separate. Because when you came in, they gave you two SIN. You have your SIN number, your husband has SIN. You did not say, what are they giving you to? So as far as tax, they still see you individual people. But of course, when we file, we couple them together because that will enable us to maximize your credits. There are some things, for instance, donation. It's better for the person with the higher income, whether Mr. or Mrs. is irrelevant. So the person with higher income, is better for him to claim your both donations rather than you claiming your own. Let my husband claim his own. Yeah, you will be able to claim individually if you want, but you won't maximize the family income. If you submit it together like that, you may get more refund than if you do individually, and that's why we couple them. But we still need to put each person what they make. They want that rules. And I know a lot of churches, they combine donations too. And what I always advise is don't combine donations. If Mr. donated, give Mr. their own tax receipt. I know it's too much work, but that is the transparency that CRA expects. If Mrs. give Mrs. At the end of the year, give them their tax receipt. I've had some couple, they will tell me, I want to use my donation. Don't use it for my husband. And in law, even if you are a couple, when I'm filing your taxes, if you don't want your wife or your husband to know, they cannot know because it is an individual thing. So we've seen instances even in the house of God, for whatever reasons. Because if you use Mr. and Mrs., let's say the Mr., it's the Mr. that will get the refund. And some Mr. will get the refund and just pocket it. And that brings an issue. Oh, but you use my donation receipt. How much is my income? And all that. But if the family setup is one account, one this, it might not be an issue. But church should not also fall into it. But where it works is even if you bring your Mrs. donation receipt to file on your name, of course it's allowed, as long as your wife is privy to it. Yes, it's allowed. It's not compulsory that it must be Mr. and Mrs. on the receipt. I can use Mrs. John on Mr. John's tax receipt. We have tax brackets. Like I said, it's more income you make, more taxes you pay. For this year, they've increased the bracket for us for 2024. From 0 to 55,000, they will pay 15%. But generally, if you make up to 26,000, you are not likely to pay any tax. Because all those non-refundable credits I mentioned, by the time we applied it, yeah, sometimes those credits will even be more than the income you make, and zero tax liability. But that is not your own call. Oh, the tax consultant that came to our church told me if I make less than 25,000, no tax. No, you still need to file the return. Please, file it, tell them your income is 25 or whatever you have. We will do the calculation and you will see it there yourself. And CRA will see it. Even if it's zero, you still have to file. So 15% goes there. More than that, 58,000, 20%, 111,000, 26%, 29%. We have 33%. And this is federal alone. The province is about 10, 15, 20, depending on how much you make. So you can just see that the higher you make, the more taxes you pay. There was a year I was looking at my T4, And my taxes alone was close to 150,000. And I said, if I alone is paying 150,000 as tax to government, what is the benefit? Am I the only one in this country? Unfortunately, it's because if you have jumped into all those brackets, there's no mercy for you. If you are 33%, they slam it 33%. And all those credits, non-refundable, you will see that they aggregate it and they only give you 15% of all those summations. So the more you earn, the more you will pay. But of course, we see, I was just being mischievous when I said, you see what we pay taxes for. The roads are there, the electricities are there, and all that. So we don't have reason to complain. It's just unfortunate that the more you make, no matter your amount in this country, at the end of the month, you would think they just use computer for, there's no extra, no matter your level. Once they remove tax, remove this, remove that, you will see that you're almost just surviving. Yes, and that is the way they've built the economy. It's not as a salary earner, you have surplus money, 200,000 in a year. No, it's not possible. Unless you are doing businesses. This economy is made for businesses. So, and that is why we encourage people, go into your small businesses that you know of, join your salary with every other thing. Don't rely solely on one income. And if you do businesses, a lot of things you can write off. You are not violating any law. It's part of it. If you have vehicle that you use for your business, gas that you use, maintenance on that vehicle, everything, all those are running expenses. Whereas if you are working as a salary earner, you cannot, because you are employed. You are expected to get to work, whether you trek or whatever you do. If you like, use your car. You cannot claim all those expenses, but yes. So tax refunds, how do we get to tax refunds and owing? A lot of people too always ask me, I saw my neighbor or my friend, they always get refund. Why is it that I don't get refund? I always tell them, every individual, husband and wife, your tax situation is not the same. It's not the same. So don't compare yourself with others. That is those people within the same house, talk less of people from outside. You don't know what they filed. You don't know what they declared. So a lot of people, like I said, they play games. And they can only play games for a while. And that's why some of them, they run away from professionals like us. Because they know we won't play game with you. If you make this, declare it. If you don't want to declare it, I will let you know the implication. And I have every right to say, okay, sorry, I won't be able to file your return. You can go somewhere else. Because it will also bring the issue for me. Because most professionals, when we file your taxes, they know a professional has done this. So they take away their eyes from too much. But whereas if you file it yourself, they know that this is where people play games. And they put their eyes into almost everywhere. So don't be carried away when people tell us they get refund, they get refund. Some of the areas they play games is on donations. Donation receipt, they will donate 100. But when they are filing themselves, they say, I donated 1,000 or I donated 2,000, just for them to get more refund. Of course, CRA will give them. But by the time they see the return of RCCG Goose Hack, with names of everybody, what you donated, you will compare with what you filed. They will see it. RCCG says you donated 100. Now you are saying you donated 10,000. And we are giving you a refund based on 10,000. Then they will run after you. And at that stage, you are going into tax evasion or tax avoidance, which is against the law. So please don't be carried away with owings or refunds. Double taxation treaty have explained that tax evasion is when you are trying to avoid paying tax, and it is a crime in Canada. One can be jailed for up to 5 years, irrespective of the amount. Because if you can evade 1,000, they don't look at the value. If you have the opportunity to evade 1 million, you will do. So that's why it's the same jail term for up to 5 years, plus 200% of what you're supposed to pay. And the tax evasion is, oh, I did not make any income, zero. Oh, zero. Oh, nothing in the last 2 years, or in the last 3 years. Meanwhile, you are making money, and by the time they discover, you will be in that trouble of tax evasion. Tax avoidance is not a crime, but it's also, it comes with a penalty. That one is where you make income, but because you don't want to declare much, you declare part of it. Evasion is that guy doesn't even want to pay anything, but this one wants to pay small, wants to take advantage of loopholes in the law to reduce what they are going to pay. So that's tax avoidance. And it's also subject to 200% of what you're supposed to have paid. So due dates and penalties, April 30 of every year is the due date for all personal income taxes. And the penalties, if you fail to pay by April 30, there will be penalties and there will be interest for late filing. Like I said, it's compounded. Every day, they will be calculating that interest until you pay them. For self-employed people, by June 15 is when you're supposed to file your taxes. As long as you have your self-employment business, you are not supposed to file by April 30. You can wait till June 15. But the clause is that if you wait till June 15 to file, that's fine. But if you owe any amount, CRA will go back to April 30. They start calculating the penalty for you and the interest that you're supposed to have paid, even though legitimately they gave you up to June 15. So invariably, it's better for you to do your things by April 30 and just move on. So foreign properties in excess of 100,000, we usually ask people, do you have, it's part of the requirement on the tax form by CRA, do you have aggregated properties valued more than 100,000? We call it T1135. That form is very, very compulsory for us to fill. If you don't fill it by April 30, if you fill it by May 1, it's late filing. And the penalty for that form alone is $2,500 for not submitting it on time. So, and how that works is you have investment, you have your CSES, you have shares, If you sum all of them together in Canadian dollars, are they up to 100,000? If they are not, you are fine. Be silent about it. But if they are more, please declare it. I've been here for 15 years, and I've been declaring from day one. And you don't pay tax on it's your investment. No Canadian government will save the money you are bringing from home. No, you pay taxes on income, not taxes on investment, especially investment that is not made in here. You made it before you came in here. The reason why you need to declare is that by the time you start bringing some money to pay your mortgage deposit, meanwhile, you've been here for 3 years, you've been always been telling them, no. Now, 2 years down the line, you now brought 50,000 because you wanted to buy a house. And like I said, everything is transparent. Sorry, Bro Wale, for revealing some of your secrets. There are some things that banks, if you pay transactions of up to 10,000 in a week, there are rules. All banks, they know they must report it to the appropriate quarter of government. Yes, FinTrack. If you like, do 2,000 here, 2,000 USD, everywhere. Once it's aggregated more than 10,000, they have to declare it. Now your 50,000 that you paid for they will see it. They will flag it. Ultimately, they will call you or they will write you. They will go back here and say, oh, let's see the tax returns for the last 3 years. Oh, this person has no investment anywhere. So where are you bringing this from? It's a red flag. But if you have been declaring it, and yes, there won't be any issue. I brought in over 200,000 before from my investment back home, and nobody called me. Because from day one, I declared all my assets that I have. So that's the advantage of that. Please feel free to declare it. I assure you, you won't pay any interest. Some of my clients, like the guy of 12 years that has been filing, he has millions. And I declare it as part of his taxes. His cash in banks is over 500,000. So for such a person, he cannot hide. Because if he did not declare it, it's going to go after him. My pastor, sir. God bless you, sir. So it's good for you. I assure you, you won't pay any. Canadian government will not ask you to come and pay interest on your income that you made outside Nigeria, outside Canada, before your arrival. RRSP benefits, the first 60 days is also required as, yes.
Yes, you just made one statement in passing. You said before your arrival.
Yes.
So while you're in Canada, you have been there for several years.
Yes.
And you have investments in Nigeria, and it's including like profits and all. You have to pay taxes on that.
No,
Okay.
you have to declare it. Just to declare. Yeah, from when? Ideally, it's supposed to be from your day one, your first year filing. But if you have not declared and there's not been any issue, you can still rectify it. You can still rectify it going forward. But if it's your first filing, I will advise declare it. You are not. The reason why I said before you came, but now that you have landed, every income that you make, you have to declare it. Yes.
As you are here in Canada,
Yes.
you are investing in Nigeria, maybe you have an investment that you are
Yes.
pouring money into
Mm-hmm.
Canada.
Mm-hmm.
Is that investment in Nigeria liable to pay tax?
Which means you did not listen to my previous life. Worldwide income. Worldwide. Any income that you make, irrespective of where you make it from, as long as you are a resident.
I was thinking the income was like money you work for, like
No. That's why I mentioned types of income. Yes. Your interest, even if you just leave money in savings in Nigeria and it's yielding some things, you bought shares. All those are investment income. This one is about your investment in itself. I invested 100,000. Then where the tax will come on this, let me clarify that. If you declare 100,000 or 200,000, they will ask you where, how much is cash, which bank. They don't need account number. I have 50,000 in this bank, in that bank. Then they will ask you, did you make any income? If you did not make income, just like we know in Nigeria, some investment, you won't get anything. Or that column will be zero. But if you declare that you made something, income, so that income that you make on this will have to be added to your income. Yes. But it's only the income portion, not the investment amount. Yes, ma'am. Yes.
Like for someone that in pension,
Yes.
this 25% of our pension,
Yes.
or maybe rent income,
Yes.
properties goes,
Yes.
I will still declare this on that.
Yes, you are expected to declare it, ma'am. Yes. Inheritance is a different thing. It's a gift.
Based on the foreign properties before payout.
Yes.
So now, right now you're here, you don't even know that you have an inheritance. Something just happens and they say, oh, you have one inheritance somewhere that you don't know about.
Mm-hmm.
And then that inheritance is a lot of money.
Yes.
And then you have to also declare.
You have to declare it, yes, going forward. And that's why I added going forward to it. Yes. Yeah, your pension income is an income. Yes. Yes. Yes, I know. Yes. Yes. Interest on savings, interest on dividends you received. Yes. Yes.
Even that investment you have
Yes. Yes, the income. Yes. Okay. Sorry, after him, you, sir. Yes. But maybe I should finish my presentation if you don't mind. Because if you start asking questions, maybe my next slide will.
We have, if you go, so for some of us want to have questions to coordinate, especially you scan this barcode, and go to Slido.
Thank you.
If you don't want to forget, type your questions in there because it's possible as presentation is going on.
Yes.
You can forget. If you also go to our social platform, you will see the Slido link there. Pick it up, you type in your questions. If you are writing it, fine. But for people who are, you have questions and want the presentation to be over, just go into the Slido, put your question there. They will pick the question up. Then we'll be able to answer it after the presentation. Thank you.
Thank you, Pastor. So back to slides, sir. We're almost done. Can I change from here? Okay. Yes, sir. Okay. So RRSP, the only thing I want to talk about RRSP, like I've mentioned before, RRSP is not tax avoidance. It's just tax deferral. You will still pay tax on it in future when you retire, 20, 30, 40 years time. But the advantage of that is that as at that time, you are not getting much income. Maybe this RRSP will be your only income. By the time you then go to your bank and take 10,000 from your RRSP, it will fall into probably the first bracket. Whereas now, if you did not do RSP, maybe you will be in 33%, which you will have paid those high tax amount. But eventually you will still pay. But of course, if you have need for that, your RRSP, banks, they know what they can do for you. And it's not because they like you or they know you or because I know Brother Wadley. No, you has to work according to the law. If you take, what can you use it for? I want to buy my first house or I want to use it for this. There are rules. Once you are within those rules, they are allowed to give you. But however, they will still tell you, you have to pay it back within 10 or 15 years or so. So even though it's your money, they gave it to you, but you have to pay back. If you don't pay back, then it has penalty. But let's assume I want to take my money. I don't want, it's my money. Yeah, take it. They will, the maximum they do is they will take 30% upfront, straight away. Then they will give you the balance. That 30% will represent your tax that you will pay on it. Of course, at the end of the year, when you file your returns, plus any other income you make, you may not pay up to 30%, but the banks are to withhold 30%, pending when you do your tax filing. Once you do your tax filing, it might just be 15 or 16 or 17% tax that they will deduct from it. But upfront, they will take 30% straight away. So it's just a tax deferral. And of course, there's maximum limit that you can contribute. If you don't file your taxes, it's difficult for you to calculate your limits yourself. But once you file your first tax, CRA will tell you, based on this income you are declaring, your RRSP for 2025 room is X amount. Please, you cannot contribute more than that. If you get bonus from somewhere, and you say my RRSP room is 6,000, but I have 50,000 coming from somewhere, let me put everything to RRSP so that no, you can't do it. If you do that, they will even charge you more. So you can't contribute more than your room. So please note that. Withholding tax of 30%, I've mentioned that. Are Canadian students liable to taxes? Yes, most of the students, they are here for more than 180 days. And they are, of course, deemed to be a resident. At what age should my children be filing taxes? As long as they start working. Most of the children start working age 14, 15. Even though by law it's adult from age 18 and above that you are statutorily required to file your taxes. Below that, you are not required. But I always tell my clients, you don't lose anything. Because if you are worked at Mr. Biggs, or what do they call it? McDonald's, sorry, thank you. And you earn some money, probably they've removed some taxes for you. If you don't file, you won't be able to collect that taxes back. And how much as a student? There's no way you can earn 25,000. So if you don't file the taxes, you won't be able to collect what they have deducted from you. So that's the opportunity for you. Even as a 14, 15-year-old, we do the calculation with, oh, you have paid tax of 700. You are supposed not to pay anything. Then the CRA will refund your 700 back. They won't say because of your age. No. And unfortunate too, because all those non-transferable credits, it doesn't go with age. I wish it can go to age. People like us, our own non-refundable should be bigger. But you will notice it's the same for everybody, Mr., Mrs. Anybody filing taxes, even if your income is $200, you are still entitled to 15% of 15,000 as your non-refundable credit. So it's always better for them. Let them file. Let them have their record with CRA. And also there's what we call GST refunds, which they give to low-income people. As a student, once you file that, they will be sending them quarterly refund, which is useful for students. And also for their tuition tax credits too, for our children that are in post-secondary, all their tuition fees and all that, there's a tax credit for it, which they're supposed to be filing and be to future years, because if they don't work, those credits will not be useful. But for all the tuition, they will be keeping it for them until when they start working, so that once they start working, all those credits, you have filed it already with CRA, they have the records, so, and you'll be able to enjoy it. And of course, also for students, the parents, the student can transfer about 5,000 to parents to bring the taxes of the parents down. But unfortunately, it's at the mercy of that child. It's very painful. I paid the tuition fee for my daughter. Now I need to beg her to sign at this back of the something for me to collect part. It's not everything that even if my tuition fee for that child is 20,000, the maximum it can give to me is 5,000. So, but he has to authorize it. If he doesn't authorize it, sorry, we cannot do the transfer for you. So that's their law. But it's good for them because they are keeping it. By the time they start working, they will be enjoying the lower tax, and they can carry the payments forward. RESP, this is a registered educational saving plan. It's usually good for our younger families, and I always encourage them to take advantage of this RESP. And if we manage it very well, from age 0 to age 17 is when you can open this account with the banks. And as you are putting money there every month, the government is also matching it for you. From age 0 to age 1, age 2, age 3. If you can discipline yourself, by the time that child is age 17, I can assure you, you will have nothing less than 50,000, 51,000 in the bank for that child. So I always tell people, all those child benefit that you get is not meant for groceries. The moment you use your child benefit for groceries to maintain the family, something is happening. All those child benefits, try and open RESP for each of your children. Return that government money back to RESP. Government will match it again for you. It's their money that you are investing in the first place. But I know it's difficult to work on that religiously, but that is one of the best way for us. Take this child benefit, 500, drop it there. They will match their own. Every month is growing. Don't touch it, leave it. Interest will be coming. At age 17, you'll be surprised you have 51,000 to take care of the education of that your child. Of course, it has to 50,000 is what you can contribute through the lifetime of that child. 2,500 per child, maximum per year. Is not, you see a windfall of money and you say you want to drop it here. No, you can't. Yeah, that's that one. First-time home buyer credit is also available. If you are buying your house for the first time, there's something you 5,000 tax credit for you. Record keeping is very important in Canada. Please have a file for your tax documents. When they wake you up from sleep, you know, once you pick that file, very, very important. CRA can come to you something of 4 years or something of 5 years. Is a rule. This is 2025. They can ask you and say, we want to see the document you used for your tax filing in 2020, in 2021. So, and you can't tell them, 2021, I've destroyed it. No. Koti law. So, we have to keep all those records. Annual tax audit, they do annual tax audit too. We're about 33 million people. If, let's say, the people that file taxes are 30 million, it's difficult for CRA to quickly look at 30 million records in 1 month. So that's why it takes them a lot of time. And because they know even at that, they are not in a rush to review your filing. They have time. So, and that's why they always advise people, keep for 5 years. And they do the annual audit. If you file your returns, they can pick your file and start asking for, because when you do your self-assessment, they don't ask for any document. Just if we ask as tax practitioners, that is for our own record. It doesn't go to CRA. Until CRA needs it, they will write to you and they will start asking for those documents. Low income tax preparation scheme, there are a lot of schemes in Canada where you don't need to look for a professional to file your taxes. You can do it by yourself. It is a developed country. You don't need any tax. You don't need to engage tax practitioners to file your returns. Just go online, do it. But the only risk is that you only know what you know. And unfortunately, CRA will not tell you, you're entitled to this credit. You did not put it, go and put it. They won't tell you. It's only when you hold them or you did something wrong, that's when they will come after you. But, oh, I forgot to claim this credit. You can refile, you can do the process all over again. But if you have people that can do that for you, why don't you, to maximize your credit and all that? And also to put yourself your mind at rest. If somebody does your returns for you, he's accountable to everything there. But of course, there is low income tax preparers too. CRA works with CPA. I do it as well, not with my firm, but with CPA as volunteer for people with low income. We don't charge them for that service, but it has to come through CPA. So, but however, like I said, your tax situation might not be the same. I will recommend you consult your tax professionals to maximize your tax credits, and you have rest of mind. So our TFSA limit, that one is also there, is 7,000 now. It used to be 6,000, but 7,000. And all this big money, you just see them. I wish they can just be paying us that. Unless, give me my 7,000, unless next year give me another 7,000, but it doesn't work that way. This one is to allow you to set aside your money to invest in anything you want to use it for. And the good thing about this is cumulative. You are entitled to 7,000 every year. If you have been here for 5 years, before it used to be 6,000, but it may be around 30,000 for you now if you have been here for a while. Which means if you invest 30,000 in TFSA account and you get investment income of 20,000, that 20,000 is free. You own any income you get from your TFSA account is zero tax. So that's the advantage of that. But of course, that your investment amount is after you have paid your tax. The 7,000 you are taking is from your after tax. CCR, carbon rebate tax, refund. Yes, it used to be climate action before, but if you file your return, there's this rebate that government is giving back now. For Alberta, we are one of the highest in the area of climate rebate. We get, a family can get as much as 1,800 in a year, about 450 every quarter. But it's a family benefit. And the way that works is whoever submit their return first will be getting this money on behalf of the family. Sorry. So there's a way they calculate it. Each member of the family, depending on the number of children and all that. So that will determine how much a family can get. But whoever submits the tax form first will be getting the refund for the entire family. And it's a check or they pay into your bank account. So this is not a non-refundable. This one is refundable. You will get it. Other changes, I've mentioned all those ones. So that's my contact if you need professional support. So that's all. Thank you so much. Sorry I've gone too long, but I hope they are useful tips, yes. Thank you, Pastor.
That's why you're still going to be taking questions.
Yes.
I just feel that you should sit down.
Oh, thank you.
Yeah, so that when you are taking the question,
Thank you, sir.
you are not.
Yes, sir.
Yes, sir. So, like we said, we will take some. Justin is going to coordinate the question and answer session. There are some questions that has been set online, and all of you that are here, you are free to ask your question. Even if what you want to ask is outside of what is presented, as no longer as related to tax, you can ask. Our daddy will be willing to help us out.
First.
Okay. So, and for the online,
Take advantage of, sorry, brother. Take advantage of that because if you call me after, it
Yes.
may be billable hours. Yes, thank you, sir.
Okay, before we go ahead with the questions from the Slido, at least we want to attend to the people.
Yes,
here.
that's fine.
And I want to ask a question because
Okay.
I've been waiting. And this has to do with company income tax. Now,
Where's that one coming from? I gave presentation on personal income.
no, but I believe you can also help us to address. It's
outside
tax
to that
tax.
scope. Okay, okay, go ahead.
And it also affects
Yes.
company income tax,
Yes.
personal income tax as
Yes.
well. So, for example, you own a company, it's incorporated.
Mm-hmm.
You're making money from the company, right?
Yes.
And you want to get money from the company. And you want to try as much as possible to reduce your tax obligation.
Yes. Maybe
Y-
not to reduce, to maximize.
to manage,
To maximize.
yeah,
Mhm.
maximize.
Okay.
And you pull out money from the company
Yes.
to your personal account.
Yes.
And it's deemed as probably as borrowing,
Yes.
right?
Yes.
How long do you have before you can return that money back? That's one. Two, is there any liability if you don't return that money back? Three, if in the event that you are supposed to return that money back, and probably you don't return, maybe they say 1 year, or maybe they say 2 years, you're supposed to return the money back now, right? And you don't return that money back within 2 years, can you convert that money from loan to more or less dividends and then pay the tax on that dividend
Yes.
over a period of time? Because obviously maybe the amount would have been some amount and you
Mm.
now pay the tax obligation over. So, but how best would you advise to get your funds from your own company? Because, there are two things. You can decide to pay yourself a salary where you now have to do payroll and all that.
Mm-hmm.
You can decide to do dividend where you issue dividends, or you can even do cash dividend where you pay yourself installmentally every month and all that. So I would like, you to explain more on that area and also address those questions.
I'm happy you've answered as a professional.
No, I'm not
No,
a
you
professional,
tried, you tried.
but I just
Yes,
want,
the rule about that is it's a complex area that you need professional to deal with. When you have corporation, don't bother to do it yourself. Look for experts because there are various rules. Yes, salaries. You can claim salaries. You can get bonus. You can get dividends, but each of them, they have their tax implications. They have their tax rules that you need to follow. So, but to go straight to your question, you took money. Because if you took that money as salary, you have to report it in your company. It's an allowable expense, salary. In your own personal income tax, you're supposed to file that return. Even though you are the one that owns the company, it's irrelevant. That company pay you salary. It's the same thing as if you are working somewhere else. That company is supposed to give you T4. I'm the one that owns the company. Why do I need T4? You need the T4 if you are claiming salary. And the salary, of course, they have rules. You can't say, oh, because I'm the one that owns this company, my salary is $300,000. Because if you are working with your qualification, with your experience, if you get job, how much will an average company give you based on your experience, based on, if that, you get a job of 40,000. If you have your own business, you cannot say my salary is 100,000 or my salary is 200,000. After all, it's my company and I'm making that money. That's why CRA looks at salaries, especially if you are the owner, because they know a lot of people play games. So before you can say you are paying salary, there are things that we need to be sure of that is in place. So, but if the salary is not there, you can pay yourself bonus. There are rules. At the end of the year or at the end of every month, you are collecting bonus agreed by your shareholders and all that. But even if it's a bonus, you still need to report on your personal income. Now, I get bonus from this company. But where you don't want to do all that, now, yeah, it's my company. I took 50,000 from the company. I don't want to declare it as my personal income because it's not income. It's a loan that I got from my company. Yes, you are allowed to do that, but under the certain condition. Generally, it's between 2 years. Within 2 years, you're supposed to refund that money back to the company, or maximum 5 years. It's not something that you will take and borrow for forever. So if you don't declare it, because in your company, we assume you will have financial statements where you have to tell us where is that. That is a liability that the company is owing. To get is an asset that they will get from the owner of the business. The owner of the business is owing this organization this 50,000. So when you submit your financial statement, they will see where it is, and they will be able to tell you, sorry, this has been in this your statement for too long. They will write to you, they will tell you, you need to refund the money back. If you don't, then they will take certain steps after you. And of course, like you said, you may decide at that stage then, okay, we want to convert to dividend. And like I said, dividend, yeah, you decide after year 3, let's say year 3, you have collected 50,000. In year 3, you don't want to refund the money. Yeah, you can decide and have a minute. There are rules, and declare that dividend of 150,000. From when will you be paid? Like I said, you don't pay, taxes are paid on cash. So everything you have been collecting is assumed to be in advance. So when the decision was taken to pay you dividend, it's that year that you will declare it as income, even though you've taken it in the last 3 years. But because decision has just been taken, so once decision is taken as dividend, then it needs to appear in your income of that year when the decision was taken. And that will clear your neck, that will clear the company as well. Yes.
Questions?
Good afternoon, sir, again. Thank you for this presentation. It's been very enlightening. So I guess I have quite a number of questions, actually. I think I'll just take them one after the other. My first question will be, so while we were talking, you said even if you were earning $0, right, you will advise, it's not compulsory, but you advise that we file.
Is that what
Right?
I said? You must.
Oh, you must still.
You must.
Okay,
yes.
so my question is, even for the time we don't have jobs, we don't
Yes,
have
yes.
anything.
No,
We have to
filing
file
has
from that
nothing to
time.
do about job.
Okay,
It's an annual ritual that you must do.
okay.
It's whether you
Thank you
make
for
income,
putting it like that.
because on the form, how much did you make?
Zero.
Yeah.
Okay.
Mm.
Then, while we were applying for CCB, I remember filling a form that looks more like the tax this thing. So I just wanted to ask, does that cover for that year? Can that pass for your tax filing and all?
No.
So that's different.
No, your CCB is different.
Okay.
Your social service is different.
Okay, because
Your EI is different.
is different.
Yeah, they are all different. Your annual returns is your annual personal income returns. It's
So-
different. They don't see themselves.
Okay. So because I wanted to know if we automatically filed
No,
at the
not
same time, because
automatically.
the part of the payments and the returns that I saw,
Yes.
CCB was part of it. So I'm wondering,
Yes.
okay, is that why we are paid this money? Did we
No,
automatically?
That
okay.
one is a benefit.
For that year, we
yes.
did not.
Yes, that one is a benefit, and it's not taxable too. It's not taxable. What you get for your children. Yes.
Okay, so another question is, if I worked and I was paid in cash
Yes.
and I didn't necessarily put that cash in my account,
Yes.
are they still going to be asking me for tax on top of that money?
No, it's only your conscience that will be asking you. Yes.
Okay.
Yes, as long as you.
Sorry,
But
I
you
had
need
to
to be
ask.
careful. Like I said, tax evasion.
Okay.
If ultimately they know that you made income and you did not declare it, it's against law. And like I said, even if it's $1,000, five years jail time. So that's why you just need to be. Why will you not declare it? Because like I said, if you make up to 25,000, I'm not too sure, maybe that cash is not even up to 25,000. And some people will just be running away for something because of lack of information. If you declare that I make cash 25,000, declare it. They will do the calculation, based on your non-refundable credit. You don't owe us anything. You are not losing anything. But people think, oh, if I declare, they will ask me to come and pay. So I will advise, if you make cash, declare it. And if you are not declaring, know why you are not declaring. Because it depends on where you make that cash from. Because if it's from me and I gave you cash, if that person has information about you, if I'm giving you money from my business as expense for my business, I will record it on my transaction.
Yeah.
That I gave Madam A $500 for doing this job for me. So from my own return, it will expose you.
Right.
Even though I paid you cash, how I paid you is irrelevant. So from there, they can still trace it to you and say, oh,
Yes.
did you now declare it in your own income? Then they will now, and an area where people run into that similarly
Most of that place.
is when they pay people to take care of babies,
Yes.
the nannies. They will say, oh, he has paid me cash. But meanwhile, the other person declared it that I paid so person for nanny,
Child service.
for child services, to claim the money for the benefit of our own. But from your own, you did not declare it. They will trace it and ask you, oh, this person paid you 1,000 for this service. Why is your income 0? So it's always better to. I hope that answers that question.
Yes, perfectly. Thank you very much. Then I want, in addition to that, right, my kids, let's just say my kids have like their small savings. They used to sell bottle and keep the money. They said they want to use it to buy something.
Yes.
They want to use it to pay for their grandpa's ticket. That's what they said.
Okay.
So they are selling
kids.
bottles. That
Yes.
if I put that money in the account, will it be charged? Will I be expected to pay tax on that kind of earnings? Because sometimes these monies are put together and it's a lot. Say sometimes it gets up to like $200, $500. Would I still be expected to pay tax on that?
Who owns the money?
My children.
Whose account?
Well, it's in my account.
If it's in your account. Otherwise, CRA will, if as long as in your own account, they see it as your own investment, and it's your
Okay.
income on your own investment, you're supposed to declare it. You can't say, oh, this money you see in this is for my children, it's for my grandchildren, it's for my great-great-grand. Otherwise, they will lose the track. So that's why, as long as it's in your bank account, they will see it as your own income, and you declare the income. Only the income, not the entire amount you are setting aside. Your savings, you put it in savings, and they are keeping it. That will be the best for them. Yes.
Okay,
Yes.
sir. My own question.
Yes, ma'am.
Thank you, sir.
Yes.
When you talk of moving expenses earlier,
Yes, yes, ma'am.
I was like, oh, sorry, just hold on. Please, like for us, some of us, we move from Nigeria to this place. We incur lots of expenses as well before we got that job. The moving expenses, you are talking of rental like 4 months ahead. You have to buy car, you have to even do some training for you to even get that job. And we spend lots of money, you know, on monthly basis, those training, some charge above 1,000. So those ones I was like, under where will it fall? Because the professional training, you know how expensive this place is.
Yes.
Training, and then they were charging, you know, lots of money. So I'm like, you know, in your slide, I was seeing professional dues, professional fees. I was also seeing the moving expenses, but you were not saying moving expenses within only maybe
yes.
Calgary to Ontario and
Yes.
all that. So I'm just looking at how that one can come in,
Okay.
kind of, so that I can get the refunds. That's
Okay.
just my own question. And then another question, please, just the second one.
Yes.
For because this is my own new tax now. That's the first tax I'm doing here.
Okay.
So I was not like, okay, for me and my spouse, you understand?
Yes.
I was like, since this person earn more than me, should I do my own tax separate so that that joining will not? I was just looking at the expenses. I was like, since my own is not much, maybe I should just do my own separate so that, you know, for child benefits now. Because they said they will review the child benefits by, I don't know, the existing people can just tell us that one. So I was not like, maybe if I do my own small so that they will not see me as earning so much like that. Or must it be together? Must you join? That's my question. Thank you.
Yes, thank you. So the first one, I think I should just answer that. Maybe I did not clarify my point when I was talking. The moving expenses, it's within Canada. It's not, when you are coming from Nigeria, you are not coming because of work. You are coming to migrate, to settle down. So all those expenses you incur is for you. It's part of your settling. You went to school, it's part of your settlement and other. If you come with work permit too, it's because those expenses are outside Canada. You are not covered. Yes. Strictly is between to help you leaving your existing location to another location. Yeah, but it's within Canada. It's similar to donations too. If you donated to Winners Chapel in Ottawa, 200 million, you cannot claim it here. Yeah, in Canada, no. Then what's the second question, man? Oh, it's compulsory for you to, whether yours is small or big, individual, you have to file your own. Your husband, you have to, yes. And like I said, because of the benefit, it's better you joined it. And join that I mentioned does not mean your own record, because you have a sin. The law still see you as separate from your husband. Even if it's just 1,000 that you made, we will report it under your name. You make 1,000 on this job, on this, that. Your husband makes 200,000, but we now want to couple it together. Then all the benefits, all those refundable credits, that's the advantage of coupling. Okay, donation was done. By who? By Mrs. or by Mr.? Oh, who have more money? Okay, if the husband use it, the husband will get more refund of this than if you use it. For instance, if you are not working and you are donating, there's no benefit for you, except you couple with your husband. Yes. Yes, ma'am. Go ahead, sir.
Yeah, thank you very much, sir.
Yes.
My name is Taiwo
Yes.
Matthew. Yeah, I'm actually a first timer. I arrived on December.
Oh, okay.
So I want to ask, when am I supposed to file why am I supposed to file?
Like I said, you are a part-year resident. So you arrive December. You are not expected to file 2024, which we are doing now in April. So if you don't file, you are not running against any law. But I will encourage you to file. Why? Just to make sure that all your records you came in was fine. I'm sure your income you will declare 0. Probably you are still looking for a job. So your income will be 0. But however, for your first filing, they always ask for, before you came that year alone, before you came to Canada, how much did you earn? Convert it to Canadian dollars. The reason why they're asking for that is not for you to come and pay tax on it. But they know now that you filed your return, you're entitled to some benefits. So they want to use that your previous income to determine the level of benefit you're entitled to. Because benefit is family income together. So that's why they're asking for that information. So if you don't provide it, you won't be able to know. And once you file your taxes, of course, your RRSP limit and all those stuff, they will be able to tell you.
Let me just quickly ask the other question, sir.
But if you don't want to file, please, you are free not to file.
So let me just ask the other questions.
Okay.
In terms of the thing, before coming down, I actually retired.
Yes.
And I got all my pension stuff before, because I'm 50 already. So
Yes.
I was able to get all my money. Yeah.
I came at 47.
I don't look 50.
No, you don't look 50.
Yeah, I'm 50.
Okay.
Yeah, June 16.
Wow. You're welcome. Yes.
So I was able to get all my
Your
pension back. In
entitlements,
fact, that's what
yes.
I actually used for my flight and all that,
Yes.
for my kids as well. So am I going to? Is it going to be included? That's part of the question in the file. I'm going to, if at all I want to, am I going to, include it
As income.
Yes, in trying to file as my pension back home.
No, let me get the question.
I collected my pension back,
Yes.
Before coming down here. Now, if I want to file now, is it going to be, the income? Is it going to be filed as income back home?
Income is worldwide income. Worldwide income from December when you arrived.
Okay.
Your pension, if you hand it in bulk, which
It was bulk, yeah. Bulk,
so
yeah.
you hand that before you arrived.
Okay.
So you don't need to declare that.
Okay, that's off.
But if you kept it back home
No.
in a bank account, you still need to declare it. Tell them I have $200,000 in this bank. You are not going to pay tax on it, but they know.
Okay.
So that if eventually you are bringing some, they know where it's coming from.
Two more questions, please. You talked
them together.
Yeah, let me just put them together. You talked about RESP account.
Yes.
I don't really understand. How are you going to compared to the normal? Because I could account for my 2 kids as well. How am I going to? How I don't know the difference. Normal account and this RSP account.
Yes.
And secondly, while I was opening my account then with Scotia, they asked me for my tax details.
Yes,
I gave them the number. Well, I don't know why, which I actually give. And also cash from, since I'm here to start work now, the cash from, maybe cash transfer from friends, am I going to include it also in the?
Most cash is a gift.
Okay.
Yes, you are not, any income, ideally you're supposed to declare it. But because you got money from a friend does not make it an income. Okay. You will know if it's an income. So if it is not an income, maybe it's a loan from a friend, you don't need to report that. Something that you will pay back. But for RESP and all that, don't worry yourself. As long as you have this information. Now, if you approach your bank, I know they are talking about RRSP, RES, maybe not now, still follow your settlement process. By the time you fully settle down, we say 3 months, 6 months, just approach your bank. Explain to me about RESP, how it works. Explain to me about RRSP. They will sit down with you and they will explain everything to you. You will get more understanding. But that is a separate account for that child. You will open it in the name of a child. And they will tell you the maximum amount you'll be contributing and how much government will be matching. You'll be seeing the statement separate from yours. Yes.
Thank you very much, sir.
Yes.
So I just want to bounce off or get more clarity from the question she asked about moving, because
Yes.
we moved from Manitoba to this place in 2023.
Yes.
However, that was not added to our tax. Can we do that now? Or
It's rather too late.
rather too late, right?
It's
Okay,
rather
so-
too late.
Okay, then. my-
Otherwise, what you will do is you will refile for that year, which you can do anytime.
Okay.
You can do refiling. As long as you keep the receipt, you have everything. But if you don't have all the details, just forget it and move on.
Okay. So my next question is, the company I'm working with presently, I was employed as a contractor, but then I'm not incorporated yet. So do I still have the benefits of being incorporated as a person?
That is self-employment.
Exactly.
So if you are not incorporated, all income you earn there, you will still report it as a self-employed income.
And I can still take off my
You
car
can still
expenses.
take off
and-
all those expenses that relates to that job.
Thank you very much.
Okay. Yeah, thank you very much, sir.
Thank
My
you,
name is Abidemi Ojo.
Yes, sir.
My question is related to the tax, what do you call it? The agreements
The
between
tax treaty.
treaty, yes. In Nigeria, I practice estate surveying and valuation, and I do a lot of title perfection
Yes.
with Bureau of
Ministries.
Lands.
Okay.
So, and then when we do that, they ask us for payee ID
Yes.
of our clients. So if the client is now residing in Canada,
Yes.
can we use the tax clearance that
Yes.
we get from
Yes, yes.
Canada
For Nigeria.
to process the
Yes.
perfection of title in Nigeria? Okay.
No, sorry, say that again. Let me-
So, the payee ID, like the tax clearance the person got from Canada and he wants to perfect his property title in
In
Nigeria,
Nigeria.
can he use the tax clearance of Canada?
No.
He can't.
No.
Okay.
Nigerian government will say no.
Oh,
Yeah.
okay.
You have to pay their own taxes. Whatever
Okay.
you pay, they will tell you pay Canada, not here.
Okay.
When we
this-
are repairing the road,
the
you will
second
still pay
question.
payee. Even
Yeah.
though you are not working there, they will ask you pay your payee for 3 years in Nigeria. If not, they won't give you anything.
The second question is just a live, it's a scenario that happens. I have my friend here in Calgary. He has been in Canada for the past 2 years. He's not working, but God bless him so much in Nigeria. He's into real estate development. Recently, he moved about over 200,000 Canadian dollar into the economy, and he wants to use it to buy franchise. Suddenly, he said he's not buying the franchise again because he wanted to move the money back to Nigeria and decided to be importing some things from China. I told him, I said, look, this money you move into Canada, they will have already flagged you. He said, no. If they talk to him, you will just mention to them that he sold his property in Nigeria and blah, blah, blah. So now that you are now mentioning something, I'm just ruminating on it, that what do you think will happen to him? Because if you advise him, he thinks he knows too much. So thank you.
Yeah, it's running against the law. So, yeah, if CRA catches him, he will be in serious trouble. Because where they will start is they will ask for his tax returns for the last 3 years. And it's this form that I said they will look at 1135. You filed for 3 years, you told me 0, 0, 0, 0. Where is this 200,000 coming from? It's either you are doing 419 or anti-money laundering. That's where the red flag will come. And it will take God for him to get out of it. Because if he says his bank, yeah, they will ask for his statement of account from the bank. They can liaise directly with the bank, and he will now submit those statements. Which means you have run against the law, because when you file your returns, you told me you did not have anything. Now we have statement from Union Bank or UBA that says you have this cash. You did not declare it. And like I said, even if you fail to declare that form for 1 day, the penalty is 2,500. You can imagine if for 3 years. So they will just bring an assessment over him. If they clear him that their money is clean, there's no issue with the money, then they would say, but you did not declare it. You ran against the law. Come and pay $50,000 or something. Yes.
Okay, sir. Thank you, sir.
Yes, ma'am. Yes, ma'am.
So, sir, you've answered some of our questions already. When we
Okay,
asked
ma'am.
on the pension that we have, we declare, even if
Yes.
it's just sitting there.
Yes.
So, what about money we have in our bank accounts back home? Do we declare all that too?
If the aggregate, when you had, including your house, everything that you have, they are assets. Cash, your house.
Even if the house is not in my name, maybe it's inherited property,
If it's not in your name, it's not your
but
own.
I'm collecting rent on it.
It doesn't matter. As long as it's not in your name.
Like it's
not-
my parents' name,
If it's in your
and
parents'
they left
name,
it in will that, oh, they willed it to so a
to
flat,
so person.
and we're all collecting rent from each flat, every
Yes.
child. So
The-
do we
the-
declare the money we're
The only
coming in?
area where we can get away from it is because we don't have proper records back home. So they won't be able to trace that income to you directly. Otherwise, if it's in advanced countries where things are done properly, you will not run, you won't be able to go free. But for Nigeria, it's whatever you tell them. In most cases, they will trust you because they know it's difficult for them to validate. So
Okay, sir.
so if it's not in your name and you are getting the income, by the time you convert the income self with 1,200, maybe it's not even up to 50,000.
It's
So
not.
if it's not up to 50,000, they've told you, if you sum up everything, 100,000, which is, let's say, 100 million.
100 million.
So if everything is not 100 million, you
So I don't need to fill that
you
form.
don't need to fill that form. It's not necessary. Yes.
Okay, pension, but I can declare my pension.
You can declare your pension income.
Okay.
Yes.
Then I want to ask, sir, just like you mentioned that when you first arrive, you don't have a job for the first few months,
Yes.
your section. So
Yes.
in between, like for instance, I got a gift, cash gift from an uncle that sent the money directly. You know, there was where he wired it directly into my account. So such a money, such amount, I would declare that I
Ideally-
received gifts
Ideally, you're supposed to declare. but
because it
that
entered
one
my
is-
account.
That one is difficult for them to trace. The gift that they are talking about is something that is within the country that can leave my own account. I can say I gave a gift of, and in most cases, gifts for tax purposes. If you give a gift to your son or your daughter, it's not taxable. But the income that we are talking more about is about around tips. You do work, apart from your income, they still tip you. So all those ones are what you should consider. Yes. Yes.
Thank you, sir.
My brother.
And thank you for the
Thank you.
teachings and all. But
Thank
it's you kind of answered the questions because I have like fears because there's some transactions that were like some weeks, some days I would do like $10,000 worth of transaction, but it's not my money. It's like I'm an intermediary transaction.
You need to be extremely
So
careful.
how do I?
You need to be extremely careful.
Okay.
Intermediary transactions can put you into trouble.
Okay.
Yeah. It's passing through your own account.
Okay.
And as long as it's passing through your own account,
Okay.
you have to be able to justify and defend it.
Defend it.
Oh, it's my friend that paid 50,000 to, and I immediately transfer to.
Yeah.
They will see it as if you are colluding.
Okay.
If that money is a bad money,
Okay.
which you don't know the source,
Okay.
so it will put it into trouble. Don't run anything that you cannot defend through your own account.
Then
It can be in and out, but once it's more than 10,000, banks will
it's
report
way
it.
more than
Yeah.
10,000.
So,
Yeah. So then also other like money coming from Nigeria, like you mentioned, cash gifts and all of that. If it's above 10,000, is it still cash gift because the rule of flagging of 10,000 and below and things like
yeah, they will flag it, and if you can explain it that, oh, it's a gift I got from my friend,
So
It may not put you into trouble.
then how does it affect my tax filing?
It's a gift. It's a gift.
Okay,
Yes, you don't need to worry yourself too much on that.
okay, okay. Then last question, very important. Then concerning,
But like I said, you still
Okay.
need to see all the bigger implications.
okay,
If you are getting those gifts, if you declare it, what is the total amount? 25,000, maybe in a year.
okay,
If I declare it, will I pay tax? Oh, no, zero tax. Because if you say you are not working, no income, no gift, nothing, 0, and every time you do bank transactions, 5,000 here, 2,000 there, 10,000 there, they will be relating them to themselves. Oh, this person has been in this country for these years, zero income,
okay.
and his expenses is this. So it's somehow.
Then one last question.
And don't forget, when you are declaring it, you are
Okay.
converting it to Canadian.
Yeah,
Before it can be something substantial, you must have received in millions.
yeah.
So,
Then another question, like I invest heavily into cryptocurrencies and all.
Baba,
So, but the issue now is that if I've not sold an asset, I
Yes.
don't have to
No.
pay taxes
No,
until
you don't
it's,
have to,
even
until
though
it's
if it's
cash.
appreciating.
yes.
Okay.
And that's why we have problem with you, these people, crypto. You want to, crypto, that should be your name, or their name. God will help us, technology. Yes, for crypto, until when you sell it.
Okay,
Because the value moves, jump
Yeah,
like
yeah,
that,
yeah.
and yes, until you sold it, which will then pass through your bank account. Yes.
I already put it down.
Yes.
No, it's just one short question. I'm not asking your question. Thank you, sir.
Yes.
I want to use myself as an example. So
Okay.
I came in March. We came March the 29th. I didn't have a job for, say, maybe 2 weeks.
Okay.
Then I got a customer care job.
Okay.
I only did the training.
Yes.
But prior to that, I was taking health and safety
Oh, yeah, training.
tickets. So I got a job, a contract job that took me to Grand Prairie.
Yes.
And almost similar to what she said, I was paid, but talking to people that knew the job before me, they said there was no tax because we were not paid to any form of maybe ADP or something. We just were paid the whole money into our account. It was a lump sum, but maybe not up to 10,000 for like a contract for a period of 10 days.
Yes.
Coming back, I used that to get a car.
Yes.
But because of that nature of wanting to make money, I used the same car to start doing DoorDash. At the time I was doing DoorDash, I got a paying job that also put me in the field. So I was confused of how to collate all of that, how to make the payments, how to, what to file for, what not to. Can I put the expenses on the car, even though I got the car after the job?
Like I mentioned, your tax situation of individual is different. So when your tax situation is not that simple, I will advise you get professional advice. Don't file the tax yourself. Engage a consultant who will look at your issues and deal with it professionally so that it will give you rest of mind. You are not playing against any law. That's what I will advise you. By the time you are doing DoorDash, by the time you are doing moving, you need to involve the tax people. They know the right questions to ask you. Because even when you move, if your company paid you that moving expenses, you don't have any tax benefit. Yeah, it's part of the question that we will ask you. How much did you spend? You stayed in the hotel, you had this on. How much, everything for 2 weeks that I spent 7,000. Did your company pay you? Yeah, they paid me 10,000. So you don't have any tax benefit in that place, in that instance.
All right, sir. Thank you so much, sir. We'll
Yes.
take online questions now.
Okay.
Please, if you can just answer with short answers, that's fine.
Okay.
So we can end the program. The first question here is: my organization HR classifies my tax wage, my tax wage loss as low. Okay, so I guess the T4 says
Yes.
it's low. What does it mean?
The company,
They
They
said a
did-
tax wage loss plan. is low, like they classify it as low. Do you know what that means?
No, I don't.
Okay.
No.
All right, so we'll go to the next one. So it says, can you claim fuel and car maintenance for 3 months you weren't working for Uber due to exams?
No.
Okay.
You can only claim expenses that relates to the income you make. So if you are spending something and there's no income, so you can't claim.
Okay.
Yes.
The next question will be, what qualifies under child expenses to be declared for filing? So what are the child expenses that qualify
Like
for?
your school fees that you pay to a daycare to take care of your babies and all that. All those are children expenses.
Okay.
Yes.
What payments are recognized for professional training?
Your annual dues.
Annual dues.
Only your annual dues.
Okay.
Not for books, not for tuition.
And also the refund for training fees, can that
Yes,
also
for training, yes, there are some people that can claim some credits for training if there are certain categories of job that are allowed to, yes.
So it says, as a first timer who came in April, what documents should I have upon filing tax?
You should have your T-Force where you work, but if you don't work, you don't need any document. You just fill your tax form and submit it.
Okay. I work remotely and the company I work for is in Ontario. Are there anything I should note as a remote worker and as someone working in another province?
Yeah, that's why you need to consult your tax person to guide you properly. It's irrespective of where you work. The question is where you live as at December 31st, so that the CRA will be able to do the split between the federal and the province.
Can you pay tax on loan?
No,
If no,
loan
how-
is not an income.
okay. How do you present it in tax filings?
It's not tax issue, so it's not supposed to feature in your tax return.
Okay. I got a letter from CRA saying my direct deposit wants to be changed. I want to understand what this is, although the person has called.
That's 419.
Okay.
CRA they will not ask you about your direct deposit wants to change. No. And there are a lot of calls purported to be from CRA which are not. So people need to be careful.
Great. I tried to create a CRA account, but it wasn't recognizing my name. Is there a better way to go about this?
I find that to be difficult if you have filed your tax once. So when you want to create your CRA account, you should be able to go through easily. But if you have not filed before, you are not even expected to create a CRA account until after you have filed.
Okay.
And if there's any issue when you are filing, the system will tell you. It won't match CRA record, and you will know there and then.
Okay.
Sorry, to answer this question, how are we then supposed to file for the first time?
Those of us that are filing for the first time.
When you file your returns, if you do it yourself, if you file with a tax professional, they will know it's your first time. They will send you the link for you to register and how to create your own CRA account. Because nowadays, CRA doesn't do paper mailings again. They do most of their communications electronic, online.
Adding to that,
If you have not filed, you can create it, you have to create it yourself. No, after. Before filing, they don't have your record.
okay. I can also add to that,
Okay.
if I may. So for first timers, I think you can use some apps that are there to file, like Tubo. Someone
Yeah, you can
recommended
use
Tubo.
TurboTax. You
TurboTax.
can use any
Just
of
go there, file, do all the filing
Yes,
online,
yes.
electronically, and once you now submit, that the record now gets to CRA that
You
okay,
can
this
then
person
create
has.
your
They
account.
can now create a Tubo, like
TurboTax.
TurboTax.
TURB.
Yes, you have to file first before creating an account. I believe that's how it works.
RBO. Turbo tax.
TurboTax. Yes.
Turbo tax.
TURBO. Yeah. Okay. Back to our questions. Online questions. For cash job of not up to 25K, you said it's zero tax, but I understand I once still have to pay CPP, which is a lot. why still pay CPP on it for 25K income?
I think I need to clarify this. I hope people are still online. I'm not saying if you earn 25,000, you don't need to file tax because your tax will be zero. That's not what I'm saying. I'm just giving you that estimate. If you earn, because you are within low income bracket, all your tax credits that you are entitled to, for which you generate that 20,000 or 25, will be more than your tax liability. But you still need to file it. You still need to declare, even if it's 10,000, even if it's 5,000, even if it's 2,000. You have to declare any income you make before you can then say whether you owe anything or not. But of course, CPP and EI, those are statutory. It has nothing to do with, of course, there's maximum you can contribute. They are pension plan for you, for your future. So irrespective of the amount, the law still stipulate that you pay 4% for CPP, you pay 50% for EI, pay this, pay that. So all those ones are statutory deductions, irrespective of.
Okay, sir.
Yes.
Thank you very much for that. My wife doesn't work, and I always transfer the monthly rent to her account. Will that be seen against her as an income?
As long as one of you declare it as rental income. If she doesn't earn, but you have property, I assume they have property.
So this is just he's transferring money to her account for their rent, to pay
Or
rent.
to pay their rent.
Yeah, to pay their rent. So would it be seen as an income for
No,
her?
that's not income.
Okay.
No, that's not income.
All right.
It's expense.
Okay. I came with a visiting visa in July, and my husband is a PR holder, and my application for PR is still ongoing. I don't have SN yet. That's the SIN number. Should I still file tax?
If your wife, the wife is here,
Yeah, as a visitor, applying for PR.
the husband is permanent.
Yeah, the husband is
It's
permanent.
only the husband that is a resident.
Yes.
Of course, the husband will still need to put the names, the details of the wife on the returns. But the tax, because that person, the husband is not living here, is not making income here, he has no sin, then he won't have tax liability here.
Okay.
But the information will still be required.
All right, so she doesn't have an SN
No
number.
no sin number.
No SIN number, but,
But
she still needs
she
to file.
needs to, he needs to put her name on the returns.
Okay.
Because there's a section, are you married or single? You can't say I'm single because my wife is in Nigeria. You are married, you are married. But the section of the wife, SIN number, no SIN number, the name will still be her name.
Okay.
Yeah.
Thank.
I wanted to bounce off one question that you asked from online. For the child benefits that you mentioned school fees.
Yes.
But you know some for the fees, the government pays for some people, like for us, subsidy. So is that still going to be part of our declaration for expenses?
Of course.
Okay.
Yes. The government will send you a form that confirms what they have paid you. And some of them are taxable, some of them are not, depending on the type of subsidy. But usually at the end of, by February 28th every year, all the returns, all the schools, everything, they will send you, yes, exactly. Once you have it, just show it to your tax people, they know what to do.
All right, that brings us, almost what she said. Okay, so my wife just sent me a question to ask.
Yes.
She did a professional, she took a professional exam
Yes.
for HR.
Yes.
And she was asking the money she used for the exams and all that, even though she hasn't gotten the job. Can she get that back from?
No.
Okay.
No.
Okay, sir. Thank you so much, sir. We appreciate you. Please,
Thank you so
round of applause. Thank you for taking the time and
Thank
coming
you
to
so
be with
much.
us.
Thank you. I hope this session you find it useful.
Yes,
So,
it
yes.
was very enlightening and very useful
Thank
for
you,
us.
ma'am.
Can we say a word of prayer
Thank you, ma'am.
ask God that God will bless him for his time, for God will empower him, God will help him to, in his own dealings as well. God would enlarge his coast, God will bless his family, his business. God will make him have even greater clients and greater exploits in that business. Father, we thank you for your son that you have used, oh God, this day to bless us, oh Lord, giving us this knowledge for free, oh Lord. Father, we are grateful for his life, oh God. We appreciate you, oh Lord, for him, oh Lord. Father, thank you for his family. Thank you for his business. Thank you for his career, oh Lord. Father, we know that you are doing great things and you are going to also visit him and, oh God, meet him, oh God, at the point of his need, oh Lord. We pray, oh God, that you would also, oh Lord, reach out, oh God, or to him, oh God, when he has any questions, when he has any issues, oh Lord, that you will provide answers and solutions to all. In the mighty name of Jesus, we have prayed. Amen. Thank you, sir. Thank you very much, sir. Yes. Okay. All right. Yes. So if you want like a professional consultant for your tax, please reach out. Do you have your card?
On my slide, you have my
Okay. Will you share your slide with us? Can we share your slide?
share my slide, but you can share my contact.
Your contact. Okay, we'll share the contact on the. Sorry.
Great for us. The dates, of course.
Family visa.
So when you connect, when you contact him, that will happen. Okay. All right. So very quick announcement. The men. This was sponsored by the T Generals. So round of applause for the T Generals as well. And we asked the T Generals to please pay your dues and put up your dues for it's very important that we get those dues and for running this sort of programs. We'll put an announcement on it on the group as well. So we have monthly contribution of $20. Please, everyone should endeavor to contribute. Okay. Also talk to Bora George if you need more information on that as well. Okay. So I guess we should just share the grace and disperse. May the grace of our Lord Jesus Christ, the love of God, and the sweet fellowship of the Holy Spirit be with us now and forevermore. Amen. Surely God's goodness and mercy shall follow us all the days of our lives, and we shall dwell in the house of the Lord forever and ever. Amen. God bless you for coming, and see you in our next program.